Tax Tip Tuesday, brought to you by Stadler Company, the tax pros.
Well, it's Tax Tip Tuesday, and every Tuesday we get Lori Carpenter here from Stadler Company to share some great information about tax season. Always good to see you.
Good to be here.
And today we are talking about charitable contributions, because a lot of people out there give out of the generosity of their heart, which is great, but then there's that, oh, wait a second, can this benefit me in the long run on my taxes, right?
That's true.
So when it comes to charity contributions, is there a strategy that you recommend for people so they know going into it, yeah, that works, and no, that doesn't?
Well, when the Tax Cuts and Jobs Act came through, the itemized deduction where it's going to benefit you went way up. So it's a lot harder to have it help you these days.
Okay. I remember thinking that once that went through, that I couldn't even, like, I donate to Goodwill, for example. It's not, I'm not getting money, but I'm making a donation. I can't even do that anymore, can I?
You can. Oh, you can? Yeah, you can. And it would just be a non-cash donation.
But it still can count on your taxes.
It can, as long as you're going to be able to itemize.
Okay. Yeah. Itemize is the key.
Itemize is the key.
And that's going to take a lot more time.
Right.
All right. Well, let's talk about the donor-advised funds accept a wide range of assets. What does that even mean?
So in a donor-advised fund, you can make a large donation into this and then maintain a little bit of control about where it goes and how it goes out. So if you wanted to say take 3 years worth of your donations and put them all in 1 year, you can actually bump that up to where you could itemize, but then maintain control about, okay, in year 1 we're going to give out this amount, and in year 2 we're going to give out this amount. So it just is a way to still be beneficial to you and help you to itemize.
So these are the things that you can help people with when they're planning that strategy.
Right.
Okay.
Yeah, absolutely.
Well, see, that's why she's here. All right, let's talk about those tax-free donations.
Qualified charitable donation or distributions from a IRA are a great way for seniors to potentially save on their tax bill. If they're going to donate anyway, they can have it come directly from their retirement funds to the charity, and then it's going to lower their taxable income without having to itemize.
See, that's a tricky little thing, because there's ways that around that. You think you can't touch the IRA or you can't touch that fund, but ultimately you can if it's benefiting someone else, I guess.
Yeah. Now, there are some rules that you have to follow if you're going to make a qualified charitable donation, and those are that the donor must be qualified for RMDs. So at this point, that means they're 73 or older.
Okay.
Yeah. It doesn't apply to a regular 401k or other retirement account like that.
Okay.
And there is a maximum donation that can go out of $108,000 per taxpayer. So most taxpayers aren't donating that amount, but there are some in potentially a higher tax bracket who that could really benefit them on their bottom line.
Wow. Yeah. I wish I had that much money to donate. I don't think that I do. But so these are the things where a lot of these individuals who are considering these things, it's really important that you do meet with someone that understands this process, because there are a lot of ways that you could get dinged if you don't do it right, correct?
That's right. So your financial advisor, if you have one, your tax preparer, we all actually try to help lower that tax bill. I mean, that's the final goal for us, is don't pay any more in tax than you absolutely have to. And so we want to strategize knowing what your situation is.
Just out of curiosity, that brings up another question in my mind. Do you ever speak directly to someone's financial advisor when you're helping in these things? Because I would think that would be an important conversation to have.
Yeah, I do. I have several clients who will call me when they're with their financial advisor, because financial advisors sometimes don't know the tax implications of what they're asking. So when you work in tandem, you actually can really benefit the taxpayer, really go to their benefit at all ends.
Well, there you go. That's why they exist. The tax preparers are here for a reason, and to answer these great questions. You have a website where people can find you.
That's right, stadlertax.com.
You can find more information by scanning the QR code, going there, finding their locations. They have multiple locations in the Wabash Valley. And I have to assume a lot of your appointments may already be booked, but do you still have some available times?
We still have very few available times.
Because the end of tax season is nearing, and
it's getting close.
It is getting close. Have we already passed the extension period?
No. Okay. April 15th is the deadline for filing an extension.
Okay, so there's still time if you're nervous that you're not going to get it done to also seek them to file the extension. Thanks so much. Good information.
Yeah,
we all should be giving, but if you're going to give, it's nice to get a little back.
That's right.
Thanks so much. Stay with us. We'll be right back.